at August 2022, number 5B, which is a cash flow, a group cash flow question. It's a group cash flow question. Ladies and gentlemen, remember the moment you get a group cash flow question like this is W Group, has owned a number of subsidiaries for how many years? For several years. The following information relates to the financial statements of the group. So we have statement of financial position as at 31st March, like that. And then now we go straight away to the requirement. Always start with the requirement. So the requirement, they want us to do a consolidated statement of cash flows using the indirect method. Remember IAS 7, ladies and gentlemen, we have two recommendations. We have direct method, we have indirect method. If the examiner in this case is silent, we shall always use indirect method. But in some cases, in this case, it will tell you to use direct. If it tells you to use direct and they use indirect, then especially for the operating activities, you get a 0. You get at least for the other two, investing and financing, they are the same between the two methods. All right. Here, the examiner has told us to use what we call indirect method. So if it's indirect method, what I will do, first of all, I'll come straight away and write down my pro forma statement. So I'll come here and write down my pro forma here. So we have here cash flows. We have here cash flows from operating activities. From operating activities, we have here cash flows from investing activities, and then we have cash flows from what here? From financing activities. Cash flows from financing activities. So ladies and gentlemen, basically because of the size of my board, so I will have 3 columns here. I will have operational or operating activities. I will have in this case here investing activities, and then I will have in this case here financing activities. That is how we structure our cash flow statement. Of course, for your case, you're writing them in a columnar form. You shall not have 3 columns. I'm doing this because of the size of my board. Then after I do this, I know if it is indirect method. Indirect method and operating activities, I will always start with the profit before tax. And then I do adjustments. So we say adjusted for. Adjusted for, remember our acronym. You dial God's number for food, or you rest in peace. You rest in peace. You rest in peace. Yes, Tony, you rest in peace totally, indefinitely. This is the actually add I there. So profit before tax, adjusted for, dial God's number for food. For food. You dial God's number for food, or you rest in peace totally, indefinitely. Dial God's number for food, or you rest in peace totally, indefinitely. There are those guys who are really obsessed with girlfriends. So somebody told me, Mwalimu, there is another one of dialing my girlfriend's number, but I don't want to talk about that because these guys now are not using very friendly things here. So the best is to dial God's number. That is the best, that is the standard. So in this case here, we have here depreciation. So we have depreciation, we have impairment of goodwill, We have in this case here amortization of intangible assets, remember. So you go to intangible asset account. So amortization of intangible assets. We have loss on disposal, on disposal of assets or subsidiaries like that. We have gain on disposal. We have finance cost. We have here, this normally stands for working capital changes. Working capital changes. We have here, these are receivables. We have in this case here inventory. We have payables. We have tax paid. We have interest paid. We have interest paid. These two workings are very, very critical, like that. They are very, very critical, like that. So let me know once you great students of mine are able to write this. Let me know once you are able to finish writing up to here. So dial God's number for food, or you rest in peace totally. Yeah, totally, indefinitely. Yeah, if you're not connected to God, of course, ladies and gentlemen, you know that this life will be disastrous. We must be having some connection with a higher being, You guys, I'm not seeing your thumbs up today. I'm not seeing your why for yes. I need to move on. Remember, I want to do this question in exactly 30-something minutes. I'm doing this in an exam speed. So then now what I will do, I will start in this case here with, my additional notes. So additional notes, what do I have there? Note number one, I'll read the additional note just pretty fast to just acclimatize myself with the overall setup of the question. So you're told here, note number one, during the year ended 31st March 2022, W Group disposed of its entire 80% shareholding in C Limited for cash. The shares had been acquired on 1st October 2017 for a cash consideration of 1056 million when the fair value of the net assets of these were 980 million. The fair value of a non-controlling interest at acquisition was 224 million. So I can see this is a group cash flow question involving a disposal of a subsidiary. So the examiner has really assisted me. I've been able to know the general structuring of this question, that there is a 80% of a company that we used to have, and then we disposed. All right. Then we are told number two, goodwill is calculated under the full, there is a question here. Maureen is asking something here. Please always feel free. Purity wants to know that acronym. Yeah, somebody should be able to help these ninjas by sending, you guys should be able to help. Some of you should be able to, I know you have this question somewhere. Just share it in the WhatsApp group. I will really be happy. The one who was asking about the acronym, have you now mastered it? Dorothy is also asking for the same. Kindly share that question, the question paper. August 2022, question number 5B. Thank you so much, Tony. Tony is always ahead of things. Yeah, Mwasi wants us to open various accounts. Of course, you know those accounts, and that is why I normally share marking schemes with you. Those workings, for those of you who have ever seen marking schemes, do they earn any marks? No. What in this case here will be earning marks are these things you post here in the final accounts. So I've seen students doing very good T accounts. Yeah, and then when time is up, they don't post anything in this structure. Then they end up getting a 0. They end up failing AFR 7 times. So you need to know the technique. Exam technique is what is most important. Yeah, all right. So then, ladies and gentlemen, we move here with speed. So you're told goodwill calculated under the full fair value method was tested annually for impairment. At this date, goodwill rating to C Limited had been impaired by 75%. A goodwill impairment charge had been included within admin expenses for the current year. The carrying values in the individual accounts of C Limited, the one that was disposed. So they've given us their things. The loss for the period from the discontinued operations, very important. Yeah. So we have discontinued operations. In that one, I will underline profit before tax of the discontinued operations. That is very, very important because I'll be beginning with profit before tax. And remember, profit before tax for our case here will be for the whole group, both continuing and discontinued. So profit before tax here will be for both continuing and discontinued. So you add both. Yeah, because we want to look at how the cash flows were generated from the whole. Yeah, from the whole. Great. So that one you'll have to remind me later. You can see the profit before tax for the discontinued operations, they were 48. 5. W Limited purchased a 40% interest in an associate for cash on 1st April 2021, and the associate paid a dividend of 80 million in the year ended 31st March 2022. This I can even dispense off this particular account. I can even finish it. I know here under investing, now I've bought in this case here what here? An associate. So in this case here, we have here investment in associate. Yeah, and then of course we shall have, they normally go together. Dividend received from what here? From this associate. They always walk hand in hand. These are 2 marks, 3 marks really. So if you like opening T accounts, please come and open a T account for the associate. Track the changes in your asset known as the associate. Go to your balance sheet and track, in this case here, your associate. The balance sheet given, the group statement of financial position given there. Is there somebody who is able to see investment in associate? And the assets. August 2022. Anybody who is able to see investment and the assets will see in current assets, property, plant, and equipment. We have goodwill, other intangible assets, and then we have investment in what year? In associate. Is there anybody who is able to see that, ladies and gentlemen? Yeah, thank you so much. So remember, it's an asset. So you start with balance brought down here. So balance brought down, remember 2021 is our earlier year. 2021 is our bringing down. 2021 is our brought down. So in this case here, brought down, I can see a 0 there. We had nothing. All right. But balance carried down. What do we have as balance carried down in this case here for our associate? For our associate, we have here 800 what year? 816. 816. Ladies and gentlemen, remember our associate is quite an easy account, the easiest of them all accounts. All right? Nobody in this case here gets defeated with this. This is the easiest. Because this account can only be affected by 2 things. When they pay dividends, yeah. So dividends paid, and in this case here, the profit that is generated. So let's try looking for, in this case here, the profit that was generated by this associate. Dividends paid, of course, they have given us dividends paid. Dividends paid, how much dividend was paid? How much dividend was paid? They've told us in that same line. On that same line, they've told us, in this case here, W Limited purchased a 40% interest in an associate for cash on 1st April 2021. The associate paid a dividend of 80 million for the year ended 31st, like that. All right. So remember, the 80, so we have dividend, of course, is a reduction in your asset. Your cash went away. So in this case here, we have dividends. So dividend, they're giving us 80, but now remember, our share is only 40%. Our share is 40%. So 80 times 40%, 8 times 0.4 gives me what figure here? Yeah, that gives me 32, isn't it? That gives me 32. This gives me 32. This gives me 32. This gives me 32. Ladies and gentlemen, after that, come and give me, in this case here, the profit from this associate. Is anybody who is able to see the profit we got from the associate? Anybody who is able to see the profit we made out of this associate? Milikaku is giving me 128. So we have here post-acquisition profit. Post-acquisition profit. Which note is that? These guys are very, very bright. Are you able to see in this case here that note which talks about the profit we received from this? Remember, profit increases your value from the P&L. So if you look at the P&L, you're right. If you look at the P&L, you're right, ladies and gentlemen, you'll be able to see after finance cost. After finance cost, we have share of profit of associate. Share of profit of associate, which was 128. Remember, when they take it to the P&L, already they have taken their share of what here? Their percentage. Yeah, don't take in this case here, this 128, and again you start in this case here doing what here? Don't take the 128, you start multiplying it with 40%. No, because already that is in the profit and loss. That's in the profit and loss. So come on the balance. So the balancing figure, ladies and gentlemen, in this case here, of course, is coming this side, isn't it? It's coming on this side, right? It's coming on this side, right? It's coming on this side, right? Yeah, so this will be 816. So 848. 848. So we have here 800 what here? 848. Yeah, so in this case here, we have 720. Can somebody give me, this 720 represents what here, somebody? What does this 720 represent? This 720, what does it represent? The investment in the associate, isn't it? So this 720 represents our investment in the associate. Investment in the associate. So investment in the associate, so this 720 is what we put here. Shall it be positive or negative? Shall it be positive or negative? Remember, we brought in an associate. So when we bring in an associate, it's money that goes away. So this automatically becomes what here? An outflow. This becomes an outflow. All right. And do we know how much dividends we receive from this associate? This account will give me 2 marks. 2 marks. How much do we receive from this associate? 32. And now this becomes what here? This becomes positive, isn't it? Because we received. So it's positive now. It's positive. It's positive. So whenever I see an associate anywhere, I always start with that because I know I will get my 2 marks for free. Remember when they're marking, especially when the paper is very hard, they'll put 2 ticks like this. When the paper is very hard, they will say any tick at 2 marks. So you may end up getting 4 marks without doing really anything. So long as you remember, associate, go to your statement of financial position. It's an asset. Bring down your balance here. Carry down the balance for 2022 now here. All right. And then remember now 2 things here. This associate will reduce when they pay dividends. And of course, in this case here, whenever there is a profit arising from this associate, the profit comes here. So from the P&L, right here, P&L for your revision. Thank you so much. So is this clear, ladies and gentlemen? Can I move on to something different? Can I move on to something different? Yeah, thank you so much. So then come here pretty fast, come here pretty fast, come here pretty fast, and continue reading your. So there, we have tackled note number 5. On 1st April 2021, W Limited commenced development expenditure on product Q. The product is expected to be launched in the year 2023. Shillings 56 million amortized on other intangible assets included within the cost of sales. Remember, we have a clause on impairment losses. Impairment losses, those are non-monetary. We did a mistake to adjust them. Now we need to come and add them back. So we have a line here for impairment. No, not impairment, but amortization of intangible. Come and put it there, 56. Shall it be positive or negative? When I'm adjusting, shall it be positive or negative? Shall it be positive or negative? Positive because, ladies and gentlemen, remember these adjustments, costs shall always be added back. Costs are always added back, costs and losses. They're always added back. And then, of course, whenever you have gains or profits, they are deducted. Thank you so much. So, I like free marks. I like free things myself. I like free marks. Yeah, who doesn't love free things? I mean, everybody loves. That is why everybody's running for government appointments, isn't it? So then we go to 8. So 8, what are we? No, not 8, but 7. There were no disposals of PPE during the year, except on the sale of C Limited. Yeah. Depreciation for the year was 160 and is included within the... Why should students fail? Depreciation 160. These are even marks in a tembea. Even marks in a tembea. Depreciation, wake up 160. I don't have to struggle doing the PPE account. Very, very good. Ladies and gentlemen, from there now I'm seeing note number 8. Note number 8, what is it? No. Before note number 8, there is a last line there, which talks about W Limited devalued its property during the year. Applicable corporation tax rate. So revaluation gain will go to tax. Under IAS 12, that will go to deferred taxation. So when I do a deferred tax account, I'll be able to take cognizance of that. But in an exam, do I have time? Within 37 minutes, you will not have time or nothing. Hizo ni hot air. Exam in America, atajifanyia peke yake. Go to number 8. Part of the additions to PPE during the year were imports made by W Limited from a Tanzania supplier on 31st December 2021 for Tanzania shillings 5,400. This amount was paid in full on 28th February 2022. If I'm the one, once nimeanza kuona exchange rates, hii sitafanya. Hii hata sitamaliza hata kusoma. Hiyo mimi nimemalizana nayo. I will not do it because within 37, they are not hard. But within, you're supposed to do this question under 37 minutes, including the theory part given up there. So anything that you feel it's a little bit technical, you leave it. Even when you are revising today, anything you feel it's a little bit technical, leave it. You don't need technical things to pass. You'll pass without all those technicalities. Leave it. Of course, in class, I'll do it because I would want my question to balance. But for you, your case, leave them. Leave them. So then we start here. Now, once, ladies and gentlemen, I've finished just going through, I know now these are heavenly marks, great marks, heavenly marks. God has given them to me. The other easier marks now are the working capital changes. So I go to working capital changes. So working capital changes, I know I'm taking opening minus closing. So we start with receivables. Receivables. So receivables, ladies and gentlemen, is there somebody who is able to track receivables in the statement of financial position? Tell me the opening receivables. Opening receivables are 2021 receivables. These are 2021 receivables. 2021 receivables, those are the opening. Go to your assets, specifically current assets. What are the opening receivables? So you take 832. Minus, in this case, ladies and gentlemen, the closing receivables. Are you able to see the closing receivables? Closing is 920. Then you ask yourself, remember this time round we had a subsidiary that was disposed. This subsidiary that was disposed, ilienda na mzigo yote ya receivable. Iko na receivable. Go to this note on the subsidiary that was disposed. There is this subsidiary C that was disposed. So ladies and gentlemen, in this case here, this subsidiary that was disposed in note number 3, does it have receivables? Yeah, how much? 220. And because it's a disposal, you subtract. If, you know, there are two scenarios. They'll either give you a group cash flow question with an acquisition where you acquired a subsidiary, which in this case here comes with what here? Its assets and liabilities. So if it comes with assets, if it was an acquisition, then it would have added here. But if it's a disposal, what do? You deduct. You deduct. So are you able to give me this figure I write here? Are you able to give me this figure I write? So this is negative. Ukipata negative, unaandika tu vile iko hivyo. Ukitumia this approach, si lazima uanze kukuna kichwa. Unakuna kichwa, unaanza kukuna kichwa namna hii. Yeah, so unakuna kichwa namna hii, unajiuliza sasa ati ni increase ama ni decrease. Positive hapana, wewe sema kama ile OC. Yeah, it's OC. Yeah, OC. You can never go wrong. Whatever sign you get, you work with it the way it is. You work with it the way it is. Negative 3 or 8. Unaachana nao na hiyo. Ukuna kichwa sana kwa mtihani sio mzuri sana kwa sababu unaweza kuwa na dandruffs, Unaweza kuwa na dandruffs. Unajua dandruffs? We shall overcome. So then we go to inventory. So let's go to inventory. So inventory, ladies and gentlemen, inventory, what do we have there under inventory? Are you able to track the opening inventory? Opening inventory is 1320, isn't it? Opening inventory is 1320. I hope they're able to see everybody. How about closing inventory? Closing inventory ni ngapi somebody? 944, like that. Yeah. The farm, the subsidiary that went away. Never forget the subsidiary that went away. If it has an inventory, go there and subtract. You umewachwa, unawachika. Subsidiary kanaenda na inventory yake. Ni 3 or 4. 3 or 4, like that. So in this case here, inventory, inakuja inakuwa ngapi? Somebody hope amenipatia 72, Positive 72. Thank you so much. So go ahead and do the same for payable. I'm telling you, are getting heavenly marks. Very easy marks. Very easy marks. We go to, in this case here, ladies and gentlemen, the payable. Payable. So for payable, what are you able to see here, ladies and gentlemen, for payables? So for payable, we happen to be having opening of 328 and the liabilities. Closing ni ngapi payable? 288. Akasabu kalienda na payable yote. Akasabu kalienda na payable yote. Kana payable ya 80, like that. Now remember, because this is a liability, liabilities, whenever you're doing this approach, any liability, you must always change the sign by multiplying with -1. This Tony guy is really ahead of things. This Tony guy is ahead of things. Very good. Very good. Very good. So then after multiplying -1, you are getting, in this case here, -40, right? -40. Is it negative 40? Anataka multiply. Mimi nataka nipatie final answer ile hapo tumemultiply na negative 1. Ile usha multiply na negative 1. Ile multiply na negative 1. So you're getting 40. Remember, and you do that for liabilities. 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 Yeah. Abracadabra. Up to here, ladies and gentlemen. Are you able to see some heavenly marks coming in very easily? Alafu, usipanic kwa exam. Look at this other question that was brought the other day. Ambayo ilipatia wanafunzi shida sana. There was a subsidiary acquired and another one, in this case here, disposed. Hata kuambia subsidiary hata ine, it doesn't matter. The acquired ones add their figures. Hapa kwa changes in working capital. The disposed ones, in this case, you subtract their fee. You subtract their figures. You can never go wrong. You can never go wrong. So if we hesabu heavenly marks 1, 2, 3, 4, 5, 6, 7. Nakwambia hiyo semester akija akisema any tika 2 already niko na 14. Na niko na tu theory hapa na pale. Yeah, theory says kosa 20 something % plus 14. Na pass mark yenu ni kidogo sana. Tena kuambia usidanganywa na mtu ati ni 50%. Watu wanasema ni 50%. Wewe na mimi tunajua hata huko intermediate level kuna pepo ulifanya ukasema yenyewe hata 20% sikupata, but you passed. Wewe na mimi tunajua pass mark ya kasi ni kidogo sana. Ni kidogo sana. Ni kidogo sana. Ni kidogo sana. The part to shine, yes, ni kidogo sana. Ni kidogo sana. Lile kitu nataka ni wewe uweze kuwa na ile spirit ya makanga. You know, makanga anataka wheel ya gari izunguke throughout. Nataka kiambia driver move. In an exam, you shall keep on moving from one question to the other question. Yeah, and posting, in this case here, these entries. Yeah, doing very good formats. The performance should be very, very clean. Una move. Theory is not a jibu. You will come to thank me. You shall be dancing with me come next year, December, in graduation. In graduation. Very good. Yeah. We shall overcome. Yeah. You and I, we know. You keep on getting students who stress themselves out a lot that I have to get what, but no. It's about these things. The moment you have the secret to this, and then don't disregard theories, you can never ever go wrong. Now, ladies and gentlemen, I would want to leave you with this. I would want to see whether there is any ninja who will be able to do this. These are also very, very easy, but these ones I would want to leave them with you. Then we compare notes. For now, because I can see time is not on our side, yeah, you see we have a subsidiary that has been disposed. Whenever a subsidiary is disposed or acquired, you must give us its goodwill. Allow me, I do these two workings which are very, very key. So please come and give me goodwill. Give me goodwill of disposed subsidiary. Very important. So this goodwill of disposed subsidiary, ladies and gentlemen, how do we get this? We shall take, in this case here, purchase consideration paid by the parent. Consideration paid by parent. By parent, you add the consideration paid. You add consideration paid by NCI. And then you come here, get the total consideration. You get the total consideration. So this total consideration, you take away net assets. You take away the net assets of sub. Net assets of sub, either acquired or disposed. In this case here, net assets of subsidiary that has been disposed. You subtract like that. And then you'll be able to get us, in this case here, goodwill at acquisition. You'll be able to give us goodwill at acquisition like that. Yeah, which you come under less impairment loss. Less impairment loss. You less impairment loss like that to get goodwill. Goodwill. In this case, because you're talking over disposed, so goodwill at disposal. Very important. Goodwill at disposal. Goodwill at disposal. Goodwill at disposal. All right. So can you kindly get those figures for me? Kindly get those figures for me. Get those figures for me. So is there somebody who is able to see? Look at note number 1. Note number 1, what are they telling us there? During the year ended 31st March 2022, W Group disposed of its entire 80% shareholding in C Limited for cash. The shares had been acquired on 1st 2017 for a cash consideration of 1056. So remember, we are the parent. So when we were acquiring this, we acquired this 80%, and then we paid 1056. That is our consideration that we paid. Remember, 80% is really huge. 80% is more than 50%, meaning, ladies and gentlemen, that we have what we call a subsidiary. So consideration paid by the parent is 1056. We never bought this company 100%. There were people who came and assisted us, although they were non-controlling. So this non-controlling, have they given us something to do with non-controlling? Let's, in this case here, check what this guy is paid. Yeah. So we are told here, the shares had been acquired for this consideration, and they had those net assets of 980. The fair value of the NCI at acquisition was 224. 224. Can you kindly give me this addition? Give me this addition. Remember, now we are using what we call full method. Whenever you see NCI at the beginning, we're using what we call full method. So 1056 plus 224, that gives me 1280. Oh, yay. And then we have now net assets at disposal. When we were disposing this asset, this particular subsidiary, it had some net assets. So we are told in this case here, the shares had been acquired for a cash consideration of this on the fair value of the net assets of C were 980. 980. So we have here 980. So the net assets of the subsidiary disposed. Yeah, 980. So then you should be able to give us the goodwill at the time when we were acquiring this disposed subsidiary. How much? 300. Then we ask ourselves, ladies and gentlemen, whether this goodwill, whether this goodwill was impaired. Look at number 2. Goodwill calculated under the full fair value method was tested annually for impairment. At 31st March 2021, goodwill rating to C Limited had been impaired by 75%. So 75% of this. So in this case here, we have times 7, no, right here. Less impairment loss, 75% of 300. Oh, yay. Ngapi somebody? 225. So then we are able to get what we call goodwill at disposal. So goodwill at disposal, how much? 75, thank you very much. 75. 75. This working is very, very important, because if you look at even the normal group consolidation, whenever they have a disposal, they'll ask you, part 1, to calculate goodwill on disposal or goodwill disposed. So this working is very, so here I'm killing 2 birds with one stone, the heavenly things. Heavenly things. So up to here, by any chance, have you understood this? This concept, is it at home? And then if you look at your examiner nowadays, your examiner is always full of this concept of telling you that the purchase consideration had 2 components, cash 1056, and then maybe 200 million, which is deferred. So deferred consideration here in a shida, so you discount. Okay, but it was deferred for 2 years, and they'll even give you the PVF. You discount and then you add here. All right? That should not scare you at all. You should be able to look at that during this particular session, ladies and gentlemen. Now, ladies and gentlemen, I know the natural partner of goodwill. The natural partner of goodwill is NCI. Whenever you do goodwill, do immediately NCI. I repeat, where is the problem? Because the consideration paid by the parent, this has been given in the question. Are you able to see it, Mwasi? From note number 1, how much was paid? Yeah. How about NCI? NCI is still the same note. NCI figure, because I've only picked the figures. The fair value of non-controlling interest at acquisition was 224. 224, are you able to see that figure? I suppose so. When you add the 2, we got 1280. And then even these net assets of the subsidiary that was disposed at acquisition, it was 980. It has been given in the same part. I've only fixed 980. All right. Which in this case here we subtracted, got 300. And out of this 300, they've told us now in note number 2 that there is an impairment loss of 75%. So 75% of this 300 is this 225. So then we have the goodwill at disposal. like that. I've just fixed. The moment you have this format, once you can never go wrong. You can never go wrong. All right. So that is it. So always goodwill has a partner. That sister of yours, even in siblings, amongst your siblings, you must be having that great friend, isn't it? Everybody. You're told never to show favoritism, but there must be that natural. Yeah. So in this case, the natural twin sister to this goodwill is NCI. So NCI at disposal. Yeah. Because I'm looking at NCI out of this subsidiary that was disposed. So give me, ladies and gentlemen, the NCI at acquisition. Are you able to see the NCI at acquisition, the figure that you took when you were calculating the goodwill account? Oh, I'm alone. 224. I'm told 224. I'm told it is 224. How does this NCI, ladies and gentlemen, in this case here, change? What makes this NCI, ladies and gentlemen, keep on fluctuating? This NCI, of course, we expect it to increase because of what here? Post-acquisition profit, isn't it? Yeah, profit for the year. Yeah, the PAP, yes. So remember, by that time, NCI ilikuwa what percentage? Kama parent alikuwa na 80%, NCI alikuwa na what percentage? Oh, yeah. 20%, yes. So remember, this guy must have gotten share of C's profit. Share of C's profit. So 20%. Is there somebody who is able to see the profit from C? Aha. Have they given us that profit? Amagotire. Have they given us that profit somewhere? Amagotire. Have they given us that profit somewhere? Which note number? Which note number? Where have they given us that profit? Which note number? We are overcoming. What are you saying? 200. Which note number? Where are you seeing that 200 from? Note number 4. Anasema note number 4. Note number 4. Note number 4. What is? Now, you guys are disagreeing. Others are saying 200. Others are saying 88. Others are saying 88. I mean, we should be talking about the same thing. Where are we? Aha. Hiyo imewakanganya. So in the P&L, we are given a figure of what here? 88. Note number 4. Note number 4. They are telling us note number 4. The loss for the period from discontinued operation in the consolidated statement of profit or loss and other comprehensive income relates to C Limited and is analyzed as follows. So we have here profit before tax 48. We have in this case here income tax expense 16. We have loss on disposal 200. So which figure do we work with? And then there is an 88 and a total comprehensive income attributable to non-controlling interest. Ngoja, hebu fikiria kidogo. Hii nikupatia, utaifikiria vizuri sana. Hebu fikiria kidogo. So which figure do we work with? Do we work with 88 or do we work with 200? Abracadabra, hiyo nataka uifikirie kidogo. Hiyo nataka uifikirie kidogo. Hiyo lazima uifikirie kidogo. Abracadabra, hiyo lazima uifikirie kidogo. What do we work with? I want to get NCI at disposal. Woi, wengi wanaweza kuangukia 88. Sababu imepeanwa pale. Aya, tufanye namna hii. Of course, you have, if you look at the statement of financial position, you have NCI. Are you able to see under statement of financial position, you have NCI, non-controlling interest, balance brought down and balance brought forward. Are you able to see that particular working? Abracadabra. Are you able to see that working? Abracadabra. Okay. Tufanye namna hii. Wacha kwanza ikuwe hanging kidogo. Turudi hapa. What is our profit before tax? Profit before tax. Go to the income statement, ladies and gentlemen. Give me the profit before tax. So if you look at your income statement here, as we connect that with our OCI, profit before tax, not profit for the year, but profit before taxation. How much are we seeing there? 1464. And remember, this 1464 is for the what year? For the continued operations. So we have here 1464. So we'll come and take continued operations. So we have here 1464. Do we have profit before tax of the discontinued? The one you guys are reading there, I want to connect many things here. The one you guys are reading there, mnasema ni 48. 48. Are you able to give me this 1464 plus 48? That will give me how much, ladies and gentlemen? That will give me how much, ladies and gentlemen? That will give me how much, ladies and gentlemen? That gives me 1512, isn't it? 1512. All right. Now, after getting these, ladies and gentlemen, in the interest of time, come here and track your goodwill. We shall revisit this. Let's track our goodwill, because I think there is something you guys are confusing. So, goodwill account. Remember, this is an asset. So, give me the balance brought down. Balance brought down of goodwill. Are you able to see the goodwill in the statement of financial position? Are you able to see goodwill there? Are you able to see goodwill there? I'm alone. For 2021, balance brought down. How much do we have, ladies and gentlemen? 100 and what year? 52, I'm told. 152. How about in this case here, balance carried down? Balance carried down of goodwill for 2022. How much do we have there? Yeah, 200 and what year? Goodwill is 32. 32, you're right. So in this case here, we have here 32. Thank you so much. Thank you so much. Now, let me ask you a question. Do you remember we disposed of some subsidiary? Do you remember we disposed of some subsidiary? That subsidiary we disposed went away with goodwill worth how much? Went away with goodwill worth how much? 100 and what? No, 75. If you remember very well. So in this case here, we have here goodwill. Goodwill disposed. Goodwill disposed. In this case here, 70 what year? Is 75. Is 75. Is 75. Is that okay, ladies and gentlemen? Goodwill disposed is 75. You remember that account that you have just done up there. Then, ladies and gentlemen, remember this is the goodwill that went away with the subsidiary disposed. But remember, we have other what here? We have other subsidiaries. This may not be the only. Remember, you're told that W Group has owned a number of subsidiaries. All right. So then go ahead and give me, in this case here, the balancing figure. So this balancing figure, 152, are you able to subtract here? 152 minus this. What figure do we have here? 45, right? So I'm being given a figure of what here? So what does this 45 here stand for? What does this 45 stand for? What does this 45 stand for? So this 45, impairment loss, yes. So impairment loss for the whole group now. So impairment loss, we have what here? We have 45 like that. Impairment loss, we have 45. We have 45. Yeah. 45. So remember, in this case, not NCI is no. This is just impairment loss for the entire, for whatever goodwill that they had. 45 like that. Now, please come and give me the finance cost. Are you able to give me the finance cost? Finance cost from the P&L. From the P&L, read the finance cost from the P&L. 100 what year? 184. So we have 184. 184. Now, ladies and gentlemen, because I'm required somewhere, is it possible we continue with this same question maybe at, is it 1 p.m.? I don't know. I've not looked at my low-hanging fruits. I don't know when you'll be free, but you've told me now you've started your leave days. Yeah. But even if you were to stop, for example, doing this question immediately here, I mean, and again, there are financing activities which are very, very easy, all right? So even if you stop doing it at this particular juncture, I want to believe you'll end up getting so many marks without knowing even what you're doing. So let's discuss on WhatsApp when we can continue with this, or even start a new question, right? We don't have even to finish. Yeah. Although there are a few easy hanging marks that I would have wanted us to do here. Yeah. Here and even here, there's still some easy hanging marks. So it has been a pleasure hosting you this morning. We shall be able to revise our low-hanging fruits classes and now put classes during the day. Because now the assumption is that I'd invited all of you. I'd actually sent all of you to your bosses and told you that your bosses should give you a minimum of how many weeks? 2. At the very worst, 1 week. And now from what I'm able to see, about 80% of you now are on leave, isn't it? How many of us are on leave now? Deferred and cash. How many of us are on leave? Yes, Lincoln, I'll be able to do what we call the true north. The true north, we come and less. I'll be able to less that later. Yeah, they shall be recorded. They shall be recorded. They shall be recorded. They shall be recorded. Oh, 1 p.m. is Kampala, okay. All right. Yeah, now you can see so many of you are on leave, ladies and gentlemen. So many of you are on leave, ladies and gentlemen. And low-hanging fruits classes, they really help. I don't know whether there is anybody who attended my low-hanging fruit classes last semester for financial reporting. I don't know whether there is anybody who attended those sessions, especially the theory bit. Most of them called me Mwalimu after exams. It's like you knew which theories were coming. No, it's because of the number of years I've taught these low-hanging fruits. They really help. Especially the last-minute students who don't have time to study. At least here. Yeah, boosted, yes. Boosted, yeah. That would really, really help you. So otherwise, thank you very much. I have a meeting somewhere and I have to do some kind of preparation a little bit, and then we shall overcome. So I'll be able to communicate in the group what time we shall be meeting today to finish this. Thank you so much. Be blessed. Bye. I don't know what CL is. Is it company law? I don't know. All right. We talk about that on WhatsApp. And of course, those ninjas who have been following Mwalimu on YouTube, you need to give me a subscription. Very, very important. And of course, wait for part B of this question later.